The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 5th, wonderful Wednesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, well, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But more importantly, I'm here to serve you. So feel free to pick up that phone. Now is not too soon. 877-927-6648. Internationally, 727-445-1044. Of course, you can send me an email, steve@tfnn.com. I'll do my best to respond to those. And inside the Tiger's Den, an instant message is a lovely way to stay in touch with each other. So just go ahead and let me know what it is you'd like to look at. In the meantime, let's go ahead and get this show kick-started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. Right now, the Dow is trading up 127 points, trading out at 18,296. S&P is up 12, trading at 2162. NASDAQ Composite up about 40 points. Russell 2000 up 14, trading at 1253. Gold's back $4. Silver's down 16 pennies. Light sweet crude up $1.05, trading out at 49.74. Leading the charge here to the upside. Arch Coal, somebody must be buying that. That's up $62. Is that right? I've been gone. I have been gone. What's the deal here? Restructuring and emerges from Chapter 11. Okay, well, there you go. Let's Acacia Communications now. That is up 11%, nearly 12% up, nearly $12. Priceline is up 10. Amazon's up 10. SVB Financial's up 6. On the downside, Acuity Brands off $8, about 3%. Equinix down 2% or $7. AZZ, don't know what AZZ is. That's down 11%, $7. And Chain Salesforce Innovation down about $5. But you called it. Yes, you. You know who I'm talking about. That is you specifically. You called the bottom. Yes, these markets that you and I are trading these days are nothing but basically day trader markets. Intraday, too. You don't want to necessarily hold something for, more than 5 or 6, 7, 8 hours, something like that out here. Maybe you can hold it a little bit longer, but there are no... Look, with regard to your IRA portfolios, and that's a whole different scenario. That's really not what I'm focused on right now, especially in the opening phase of what we talk about. When I switch over to weekly charts, monthly charts, that's really where you want to go ahead and focus for those longer-term holdings. Now, if you're looking to get into a position, long or short, and it's an index position, now is not the time. Now is the time to just start the little hibernation. There's going to be a time. It's just not now. It is definitely not now. This is not a market for today. For example, if you're bullish the market, this is not a day of high-fiving and celebration. Just like yesterday, for the Bears was not a day of it was not a day of high-fiving. How about high-fiving and celebration? It just ain't so. And you called it. You're the one that actually called it. You were the one that said, hey, Steve-O, I've attended some of your workshops. You sold me how to buy and sell the D-point. That is exactly what took place when we take a look at this 30-minute chart here for the ES Mini. One of the patterns that I love to teach everybody, we see the A to B equals CD. This in this case here, and it's a measuring tool, right? And it's not an exact measurement tool. That's the cool thing about this ruler. It gives us the price range. Is that helpful? Yeah. the price range is helpful. It's like I don't know what it's like. It's like cooking something in your oven and have a timer. A timer goes off when you get to that first level. In this case here, it was 21.38 and a quarter. We looked at it yesterday when it was at about 21.38.50. Did we not? We did. We noticed that was a significant level of support. Of course, we also said, hey, and looking at the ES mini, you're the one that said it. I heard you say it. You said, well, Steve, we're at wave number 6. And you know how you love seventh wave moves out there. So why don't we just wait to see what happens after wave number 7? And you could not have been more right. So you had an A to B equals CD. That was completing in that 21.38 level. Then you had that seventh wave move. That came in here. It didn't confirm until, 3:30, right? 15:30, is that 3:30? 12 plus 3, yeah, 3:30 in the afternoon. Nice big old bullish engulfing candle there. In fact, shortly after that, just before I went to work out, I posted inside the Tiger's Den that the ES Mini would move up to 21.54. Now, we're trading at 21.55.75. It did get to 21.54 to be exact. It was right at about the 10:30 time frame, and so and that was a easy call. That was an easy call. Now the question becomes, because you really don't care what we did yesterday, right? You're only as good as your last deed. Now that was a pretty good deed that we had out there. That was a good deed with regard to, hey, where the market was going to go ahead and bounce to. But now somebody out there, I know it, I can feel it. They're saying, oh, okay, well, where's the market going to go now? Well, the beautiful thing with regard to this 30-minute chart here for the ES Mini is that a couple of hours ago, to be specifically here, say a couple of 12:30, not even an hour ago, at 12:30 we got to wave number 6, just like you were looking at yesterday. What are the odds that we're going to get to wave number 7? Well, first I say that's a pretty good case, that we're going to get to wave number 7. Now, if we do get to wave number 7, we'll have to take a look at a couple of other things. But when we get to wave number 7, that could be the next move for the bears to take over. How will we know? How will we know? I say you let that 7th wave occur. Let's assume that it occurs out here. There's a preponderance of evidence that would suggest that it will. And if it occurs, the short trigger will come at 21.54.25. If we see it close below that, your stop is 1 tick, 1/4, 1 tick above wherever that G forms, and so you can figure out. Now you can take that G right away if you want, but what you really would like to get is a confirmation. That first confirmation comes below 21.54 and a quarter. Your second confirmation is really 21.52.75, so just a couple points further south of that. So and price is moving higher. We don't have an A to B equals CD that I would care to draw here. Quite frankly, there's nothing that's really that clear. I'd be forcing a pattern. I don't like forcing patterns. Price, we don't have a price relative strength divergent pattern, but we do have Stevie Wonder singing in the key of G, and you and I always pay attention. Now, the beauty is when that trade fails, should it fail out here, then you know that you've got some strong momentum to the upside out there. So that is how we're going to go ahead and play it. Now, ideally, what will occur out here simultaneously, I wish I could say that even nicer. But what likely is to occur, what we'd like to see take place out here, is we'd like to see the daily contract for the NQ get above, and it's really close, get above its most recent swing point high. That is a trading day out here from September 22nd. So that price point, I'll give it to you here in a moment, as soon as my system behaves. That price point, by the way, is 48.92.25. We just want to see it get just above it. I mean, it can get as far above it as it wants, but ideally, we'll see that take place at the same time we get to that key of G on the 30-minute chart for the ES Mini. Steve Rhodes with TFNN. We'll be right back. My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special one-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, stocks, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 one-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long-short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 115. S&P is up 11, and NASDAQ Composite up 35.18. Good question posed by one of our Denners out there, and the question was, will the NQ form a seventh wave to the upside? And my assumption was that that question was with regard to the daily chart, but the answer is no. With regard to the daily chart, really we start that wave counting off of the September 12th candle session out there, so it would only get us to wave number 4 out here on the daily time frame chart. And if I take a look at what's going on the other 30-minute charts out here, the Dow specifically, let's just take a look at the Dow. What it's doing as price has been moving higher, you start to see this little small diagonal line out there. That tells me that price has been moving higher on my parameters that I use, and it's been doing it with less relative energy out there. You can see there was a similar top that formed out here, nice little shooting star, back at about 15:30 hours. That was on September 30th. That was good enough pattern once the bears arrived to show us that a top was forming. And in fact, it formed a nice top, and it created that A to B equals CD to the downside. You and I looked at it for the ES Mini, but it was the same pattern inside of the Dow futures. So at this stage here, the Dow is already showing a topping pattern. I'd love to see the ES Mini get to a seventh wave, and then simultaneously, I would like to see the NQ at least get above its high and fail. Now, you know, does that alone mean that the market would move lower? And it really doesn't. And in fact, you know, if we take a look at the NQ 30-minute chart here, it's really trading right into resistance, right? Take a look at the most recent tops out here. Let me do this. Give me a moment. I'm going to make this chart just a little bit cleaner for you. I'm going to try to do that. I'm going to open up a new chart here. So let me do this, a new chart. Now, just have fewer indicators out there, but it'll make it a little bit easier for you to follow along as we take a look at this. So we're going to just take a look at a 30-minute chart out here. Let me do this. Give me just a moment here to set up a quick little template. Come on. What? There we go. Give me just I should have had this done ahead of time. I should have been pre-gaming, pre-planning out here. But nonetheless, I didn't. So we're just going to have to just go with what we've got. I think this probably works. Yeah, and I'll just go ahead and delete some things. So this is just going to take just one more moment, because what we're going to look at here is, and we're not looking at it as we speak right now, I'm just going to delete a few things off of my chart. It just becomes very simple to see with regard. I can leave that on there. Get rid of the that. There we go. So if we take a look now at the NQ, this is a 30-minute chart, by the way, that we're taking a look at. You can see how, it's really up against a pretty significant resistance area, or at least this is where tops had formed. Let me put a horizontal line on the chart, then we can move it up and down. There we go. So here's our horizontal. You can see the last two times that the NQ was up here, it was moving higher, doing with less relative energy. You say, where is that price area? It's right around where we're trading right now, about 48.85. We're at 48.80 right now. As long as the NQ doesn't trade below, close below, on a 30-minute basis, 48.77, and has every opportunity to try to go ahead and get to that, get the daily chart up and above the previous high. But in order to do it, it's really gotta, there we go. It really needs some spinach. It needs to be Popeye, because I can tell you, this is significant resistance, a significant resistance zone. At least it has been for a pretty decent period of time. All of October, we can see that. You can see all of these price relative strength bottoms, that have formed out here, that have called bottoms. And it does fail. Doesn't work 100% of the time. I still have not found the system that works 100% of the time out there. If you've got that system, let me know. Well, you just come on right out here on TFNN and you share it with everybody, and we'll keep it a secret just amongst ourselves out here. But this pattern works really well. You say how well? I would say, gosh darn, and you could use other words out there, well, right? You use it all the time to call these tops and bottoms, especially when we're doing the show here. So I hope that helps answer your question with regard to, what I'm looking for. And we'll see how it actually plays out. There is no trade just yet. If you're long because you went long on buying the D point, you should still be long, and you should have a trailing stop in place out here. But the sphincter muscle ought to start getting a little bit tight out there. This is no market for bulls to celebrate or bears to celebrate, other than day traders, who are willing to take both sides of the trade out there. If I look at the futures indices out here, the Dow, speaking of the Dow, right? Daily chart right up against a significant level of resistance. It's TAS daily profile high, 18,209. It would do itself well to close above that level. That would actually say 18,335 would be game out there. That's what the Dow is saying. Here is the NQ, that 48.9225. Now, in the case of the NQ, it just does not want to give it up. What do I mean by that? Every time it tries to get pushed down, it finds support at the TAS weekly profile high out here. So it has not broken down. Yesterday was no breakdown. The day before was no breakdown. 2 days before that was no breakdown. You can't bust them to the downside. As Tom likes to say, they'll try to go ahead and bust it to the upside out here. In the case of the Russell 2000, she's got her mojo working out here. And the real mojo would say that the Russell 2000 could or should make it up to the 1259.10 level. That's about another 9 points above where it is trading right now. So will the markets make it up to all these? Oh, did I delete it? No. Okay, good. Whew. Yeah, sometimes I hit the wrong button out there, which is a real bummer, because then I've got to go back and redo the work. And, I hate doing the work. Anyways, so that's with regard to the general marketplace out here. There's not really a whole heck of a lot more that I think you and I need to look at for the rest of the show with regard to the general markets. But if there's something specific or you have a specific question, then I'd like you to, call in or send me an email or ping me in the Tiger's Den, anything along those lines. I'm looking right now at the email, see if anything has come in out here. That was called a professional pause. No, it is quiet out in email land, so that's okay. So what do we want to go look at next? Let's go take a look at some of the other things that we like to track around here, right? And the other things being, let's take a look at light sweet crude. The work to the upside inside light sweet crude may be over, or very close to being over. You can say, what do you mean? And what I mean by this is that its target, In the Tiger's Den last week, right? It was middle of last week, early last week, I had posted that as soon as Light Sweet Crude had broken above this wedge pattern out here, I then said that Light Sweet Crude was going to head up. I'll give you the exact numbers. I don't want somebody fact checking me and for me not to have the right facts out here. And my suggestion was, not my suggestion, what the chart then told us is that price would then move up to its next levels. Where were the next levels? The next levels were 49.75. We're trading right now, by the way, at 49.75, so that's a pretty sweet call, or $50. The actual high today is 49.95. I'm going to ask you for forgiveness. Will you cut me slack on 5 pennies for Light Sweet Crude? So that work has been done to the upside. This is a significant resistance level out here. Very significant resistance. Does not mean that it cannot get above here. And if it does get above here, 53.39. But if you were long Light Sweet Crude, you had taken kind of a swing type trade out here, I tell you, go ahead and swing it. You've just swung it out of the park. Now is a good time to use a really tight stop or just take your money and run. Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 111 right now. Question came in about taking a look at the Treasuries 30-year bond right now. That's the chart that is up on our screen. And this is headed lower. It does not get any simpler of a call than this as we speak right now. You're going to say, where is price headed to? And I'm going to say, until further notice, it's headed down to the bottom of its descending price channel. If we try to come up with what that price target might be, we're going to call right around the 163-ish type level out here. So we'll just have to track this one day at a time. What would negate it? What would negate it is closing above Stevie's red line. That's the oscillator unchanged line out here. That is not likely to occur. Doesn't say that it can't, but it is not likely to occur. We won't see that price oscillator start to rise until we see price move down towards the bottom of that descending price channel. So if you're watching us on Tiger TV, that is the blue diagonal lines that you see on my screen. That's going to be one of the tools that I share with you at my upcoming workshop 2 weeks from today. We'll be taking a look at trading range boundary lines, diagonal, horizontal, key levels. I'll show you how to the techniques in how to create those so that you can create those on your own chart. Once you create them for what you trade, you'll be able to utilize those forever and ever and ever on different time frames. So we'll show you that. In addition to that, we've made I've done 3 workshops. I love doing workshops, but most recently I've done 3 extraordinarily important workshops for you from a technical analyst standpoint. So if you're looking for the best of the best with regard to tools, then hop on over to the homepage of TFNN.com. If you've never used my services before, well, it's simple as can be because we take $100 off the first month. So you get access to my newsletter for $49. I can't even believe it. I can't even get it out of my mouth out here. But for $49, you get the newsletter service. You get next 2 weeks from today that workshop. Then you get 3 other workshops that are just basically. Years ago, we used to do these master trader courses, which were really a blast. Sometimes a few years back, we did them for a weekend. We'd travel around the country. We'd do them for, at least a couple of days, a Friday, Saturday, something like that. And, we would charge you a couple $1,000 to attend. Then we started doing some of those things online. Used to be about $900. I can guarantee you that the last 3 workshops are the equivalent of those types of master trader courses. So, and if you have tried my services before, so you've got to pay the full ride, the $149 for an extraordinary education. If you sign up today, unlike what we have done in the past, if you sign up today, you get immediate access to the other 3 workshops that I've already done. So that way you've got something to do in your evenings. Over the weekend, things of that sort. So please join me 2 weeks from today. It's going to be another great set of tools that you're going to be able to use with regard to your trading and investing out there. So that's with regard to the 30-year Treasury and what it looks like to me it is going to do. With regard to Goldilocks out here, it's basically flat at 1270. We know that at this stage here, what I've identified is a longer-term price move down into the 1190-ish type area. That's equal to the measured move out of this wedge pattern that it had formed out here. But if I were to look at, hey, where is gold in a shorter term time frame, and I'm going to go to the 2-hour time frame out here, one of the things that you noticed, and it was really excellent, extraordinary spotting on your behalf, and that's for all the others that have not taken the workshop that understand this price relative strength divergent pattern. But what we can see here with regard to Goldilocks is she has been, during the last 2 hours, has been moving lower, doing it with less relative energy out there. Now, that alone is not the reversal pattern out here, but we'll be paying attention to it to see if there is some type of a short-term bottom that may be forming out here. Now, it may or may not be forming. What the Sam heck do you mean by that, Steve? Well, if I take a look at, I believe it is right here. Here is gold, continuous contract now, and I'm using the continuous contract so that I have more data. In this case here, I'm data mining. When we take a look at these horizontal trading range boundary lines, those are the blue lines, the solid blue lines that are on my chart. And what gold already did was it had its first bounce. This is not good for gold bulls because what it did was exactly what it should have done earlier, which was bounce up and try to get back inside a very important channel line. And that number was 1280.70, not to be exact into the penny, but it was 1280.70. And we don't really use it to the penny. But you can see how price moved up to it. That's that little doji candle right now that we're taking a look at, how it moved right up into that and rejected that area. So here is the cool thing. price has been moving lower, doing less relative energy. I say to you, and you're at $12.70, so it's only $10. If we see gold close above $12.70, that is going to tell you that it is back inside one of those bounceable ranges. A bounceable range that could take price up into the 1325-ish, 1330-ish type range out there, maybe even 1334. So that's what you can look for while you don't have this pattern here on your charting system. So watch the price point. We'll call it 1281. You see gold move above that. There's a pretty good indication that there's a nice bounce that is underway. And that is what the 2-hour chart for Goldilocks is communicating to both you and I. So we've taken care of light sweet crude, we've taken care of gold. What should we take care of next? Why don't we use the next couple of moments out here, 2 minutes, 2.5 minutes, to look at a couple of individual equities? Why don't we do that? Let's look at what's moving to the downside out here. See if we can get a feel for what's happening with Acuity Brands Inc. AYI is the ticker symbol. Now, this thing had gapped down. We'll see what kind of volume was behind it. Looks like this was based on earnings. Initially, traders didn't really care much for what it did. However, and we're going to see that what this did was it gapped right down into a breakout. So let's do this here. Let's go ahead and get rid of our TAS profiles, because at this stage here, they don't have a lot of meaning for what it is that you and I are looking at the moment. We can always come back to those. But we're going to look at here without placing volume. And we know that there was a wide-ranging bar and a breakout in the ticker symbol AYI, Acuity Brands. That was at 226.68. Did price actually get down there and test that level? No. It got close to that level. Now let's go turn on volume. When we turn on the volume, what we're going to see is, the volume there, interestingly enough, was only about 1.6 million. And today it's 1.7 million already to the downside. I expected that I would see something larger, much like this trading session here from May the 2nd. But that's not what we got. That had 8 million shares. That was not a wide-ranging bar. I never know how to deal with candles like that, where you got big volume and you've got no price spread whatsoever. Something else was going on that trading session out there. But what do we know about Acuity Brands? We know that it's probably not going to break through 226.68. If it does break through 226.68, then it's got problems. And those problems would take you down into the trading session of February 11th, down about 169 to 179 or so. But at this stage, probably this thing is in a upper level, a high level consolidation, somewhere between the 226 and we'll call, just to make it easy, around the 264 type range. That is ticker symbol AYI. You've got Equinix, EQIX. This also, I don't know also, but this is, a IBD stock, or certainly used to be. This is pulling back today, 434,000 shares, pulling back into about 1 million shares. So somewhat light volume, but here's the problem. Here's a hammer candle that formed on September 21st. That low is 348.10. You're trading at 346.18. You know what we say when you close below a hammer candle? If you're long, you're wrong. I love that poem. That rhyme, not a poem. Steve Rhodes with TFNN. We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow was up 118. S&P is up 11 points. A question that came in via email from John in Walnut Creek, California. The question goes like this. Can you comment on Apple? I know it has a higher projection of an A to B equals CD to the upside, but has it formed a shooting star with a potential engulfing with a lower close today? So it's an excellent question, and let's take a look at, let's go ahead and break this apart just as John has really written it. And so with regard to the A to B equals CD patterns out here, there's really a couple of them, right? Let's start back here on the trading session of May the 12th. Let's start that as being our A point out there. That is the most logical A to B equals CD pattern here. The B point is going to be May 26th, and the C point is down here on June 27th. Now, as we take a look at that B point of May 26th, the volume there was 56 million shares. That volume was passed with 92 million shares on July 27th. Of course, as it was passing that, the B point, it was doing it with a wide-ranging bar. That's the gap to the upside, and said price ought to move higher out there. In fact, that's what it had done. Then there's a second A to B equals CD, because once this got into the 1 to 1.618 A to B equals CD, it had a nice retracement to the downside. And that setup, and it depends on how we want to go ahead and draw these. We're artists out here, and so as artists, we go ahead and we utilize all the information that we can. Let's take the conservative next A to B equals CD that could be forming out here that I believe that John is speaking about. And that's where the A point is out here on the trading day of July 26th. The B point is out here on August 16th. And then the C point is the September 12th level. Now, in this case here, John, if that's what you were looking at, now this B point, by the way, this one had on August 17th volume of 33 million shares. That was passed with 112 million shares. That's your confirmed A to B equals CD to the upside with a price projection of 116.34. The actual high we have seen so far in Apple is 116.18. Again, I will ask for your forgiveness for not hitting it right to the T. It's not supposed to really hit it right to the T. Does it sometimes? Yeah, it does, which blows my mind more so than the fact that it doesn't. So in this case here, John, if that was the A to B equals CD pattern that you were looking at, it's completed, which I think maybe goes along with the question that you're asking, because it looks like you are looking to short Apple out here. So let's assume at this stage that that's the A to B equals CD pattern versus this one here. So let's draw in the one that, here's the next one that John could be taking a look at. And it wouldn't be wrong, by the way. That would get you to 121.26, right? That's just coming back a little bit further for our A point. We could go even one step further back here, and we could start with the swing point out here on May the 12th. But, when we start backing up like this and taking a look at these A to B, that would give you 123. My preference is always then just simply to go to a weekly chart, right, where you can more easily see the discernible swing points out here. And in this case here, what I would use, and we'll take a look at that. We're just going to do this, and we're going to go by step. No reason not to. Here is our A to B equals CD. That gives you that price projection of 121.26. In this case here, on a weekly basis, you had volume of 132. It was passed with a wide range of bar that had 400 million shares. So that's where John is saying, well, okay, I see that as the A to B equals CD. And he is absolutely correct on that. That is, on a weekly chart, an A to B equals CD pattern. So it really depends on what time frame it is that you're trading it. Back to the daily chart, because what John was asking about, so we know that in daily workout here, in my opinion, the A to B equals CD pattern that was underway is done. It's over with, right? We're going to stay on the daily chart. Now, an excellent question was asked. This is Apple. This is the daily chart. And you were asking whether there was a shooting star that had formed out here. And I'm thinking you were looking at this trading session here from October the 4th, which is not a shooting star. In fact, even if the body of this candle were down here at the bottom, at the low of the day out there, it still would not be a shooting star. Do you want to, anybody out in the audience, do they want to guess why this trading session here of the trading day of October 4th would not be a shooting star? Does anybody have an idea why that would not be a shooting star? Let me give you the counter side. In order to have a hammer candle, the market has to be moving in what direction? To the downside. In order to have its long-lost cousin, the shooting star, what does the market need to be doing? Moving to the upside. And Mr. Bill in the Den, he basically has it correct. Not that it has to occur at the top necessarily. It can be as price is moving higher. But see how price, when it completed that A to B equals CD, I don't have the pattern drawn out here, but basically on September 19th, September 16th, price started moving lower. So in essence, the trend to the downside inside Apple had already begun out there. And therefore, this candle here, which on my chart does not, let me see if I can update this with anything. It looks like that is the session. That is not a shooting star candle out there. And then with regard to today's candle, we don't have a bearish engulfing. Here's what we do have. Let me do this for you. Let me show you. Oh, geez, I didn't mean to do that. Let me see if I can get this going here real quickly. And we should take a look at Apple. Just give me a moment here. Let this chart repopulate. Because let me show you a pattern out here that where John from Walnut Creek, California, has caught an interesting potential top inside of Apple. And maybe he didn't even know it. Look, when Apple was moving lower, it was doing so with less relative energy. See, here's a couple of hammer candles that were formed inside of Apple back in May. The market had been moving lower, right? So in order to have a shooting star, you've got to have a market that is moving higher out here. But look at what occurred off of that price relative strength divergent pattern. If we start counting the waves from that low, guess what formed as the 1-to-1 A to B equals CD had completed out there? Yes, Stevie Wonder's Singing in the Key of G. So the question is, John, if you were asking basically, do you have a short indication in Apple? And I'll assume that that's what you were asking for. The answer is, yeah, you had it days ago. You had it over a week ago when you had that seventh wave session out here. And as long as the high from September 20th is not taken out, that's what you've got. You have price trading below Stevie's red line. That says the price oscillator has begun to turn down out here. It is above zero. The price oscillator itself, that says retracement is underway. Well, that's your price relative strength divergent pattern. But that says that the retracement is underway. You've got to be careful, though, in shorting Apple. Why do you have to be careful in shorting Apple out here, even though you have a pause button or possibly a top? And I say you've got to be careful because of the trading day of September 14th that had 112 million shares out there. Apple's got some pretty decent support. Let's put up our TAS market profiles and see what kind of information they provide to us. Now, maybe John's using Apple as some type of gauge for the NDX 100 are going short. So maybe it's more for that than it is actually trading Apple. But at this stage here, if you're looking for shorts, I would say there are better candidates out there than Apple. And I would especially say that with regard to the volume as it was coming, as that September 14th, September 15th sessions had occurred out there, especially in light of the weekly A to B equals CD pattern that still has been unfulfilled. So I hope, John, that helps answer your question. But if it doesn't, just write back and let me know what I didn't answer, what new questions I may have posed by going through, taking a look at the Apple chart. So, folks, we're going to be headed into our last session, last call, because the bar here does close at 2, not in the morning, but 2 in the afternoon. Dow's up 127. S&P is up 11. We'll be right back, folks.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focus Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the 3 hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. So before we came on the air, as we came on the air, we were looking for a couple of signals out here, and really all inside of the ES Mini. And what we noticed, we know that when the markets make that seventh wave, just like Apple did, that can be the sign of reversal. So I would totally get wanting to go ahead and short Apple. I think we also have to take a look at other things such as volume, other elements inside of a stock chart, exactly what's going on, where the price oscillator is at, the things of that sort. And in the case of the ES Mini on a 30-minute chart here, we said we're going to wait to see when that seventh wave forms. Now, just because we get over the high, which we're likely to do here, we may even do it by the time the show ends. That means getting above 21.57. So 21.57 and a quarter is all we need. That's a point. We've been up to 21.56 and a quarter. So we might not get it here. We might just wait to do that during the Polar Bear show out here. But once we get there, you don't get a confirmation until the next bar, and then maybe the bar after that if it's continuing to make higher highs. So just getting to G, it on itself is not a signal. Once we do get above that, then, and because of the way that the other 30-minute charts are trading, you want to get some confirmations that there is the next top that is in place. And that's all we're looking at. We're looking at basically intraday trading. That's the way you should be thinking about this market. There is no trend to the upside or the downside. There's certainly no trend to the downside out here inside this market. We're just simply going to call it sideways trading range boundaries that it is trading within. And because we saw that the Dow was moving higher with less relative energy out there, you're going to, inside the ES Mini, let's just be specific, you're going to look at the numbers, 21.54 and a quarter. If you see a close below that, that says, okay, you could trigger the short. Just make your stop a little bit wider. Close below 21.53, that is the oscillator on change line. That's Stevie's red line. You also want to see a close below that. If we get that, then you can start seeing some downward movement to the downside. If we don't get that, then I can easily make the case at a minimum that what we're going to do is we're going to see the ES Mini trade up into about the 2160-ish range out here. If I go back and take a look at the futures, the equity futures contracts, that gives me 2159. So that could be a move out here. So that's what you want to be watching and looking for, and you always want those confirming signals. Now, I'm giving all that to you right now. I'm giving you as much as I can because odds now favor that I won't be with you tomorrow afternoon because I am in southeast Florida. I am not in a good spot for this hurricane that is out there kicking around. And if it decides to move just a little bit west, like by about 50 miles or so to the west, it will not be good. And by about 1 o'clock tomorrow afternoon, the wind should be kicking up quite a bit, which could mean I could have some internet issues or who knows what issues there might be. So my hope is that I'm with you tomorrow, no matter what, because that would be a good sign. Being with you on Friday is highly doubtful. And that's just simply because wherever the storm is at, it's going to be traveling up the East Coast. It's going to create havoc out here. And probably Friday is not going to be a good day. But hopefully, keep your fingers crossed, say some white light, all those kinds of things, or see some white light out there, because I would prefer to be here with you versus who knows what else could really be going on out there. So the great thing about hurricanes, for those of us in Florida, I've been here for 35 years or more. So I've been through several of these, and it gives us an opportunity to really plan. It's not like being caught with a tornado that just swoops down out of the sky. Of course, I've seen water spouts and said, holy cow, those are dangerous things. So a hurricane is a dangerous thing, but we've all got the opportunity to get to safe ground out here. And I can promise you this bub will be getting to some safe ground if necessary. So have a great Wednesday. Hopefully we'll see you on terrific Thursday or fabulous and fantastic Friday, but certainly magnificent and magical Monday. Have a great day, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.